Hey, what's going on everyone? It's Griffin here and I hope you're all having a great day as always. So first and foremost, I wanted to acknowledge the fact that I haven't posted a video in over a week at this point, which is quite out of the ordinary for me. I've just been extremely busy over the past couple of weeks. It was my 26th birthday on the 16th, and then I've been just mainly extremely busy with my real estate investing business, multiple units all under renovation all at once, and then also a new property under contract to buy. So I'm not joking when I say that my real estate investing business is a lot more of an active business for me than it is a passive long-term investment. But that is mainly why I've been so spotty with my posting lately, and in parallel to this, not sure why I do this to myself. I guess I just want to provide as much value as possible, but I've been working on two brand new kick-ass courses, one of which on everything you need to know about dividend growth investing, and the second one about BRRRR real estate investing, right? So both of these courses I've been working on for the past couple of weeks, and I'm hoping to make them live on Udemy as well as Skillshare over the next couple of weeks. Make sure to stay tuned for both of those, and of course, as with all my videos, if you enjoyed today's video, make sure to drop a like. It really helps the channel out. Now back to the title of the video. I've had a ton of viewers over the past couple of months ask me what my thoughts are on the real estate market, mainly considering higher interest rates, right? And when I tell people that I've been continuing to personally buy rental property, most people look at me like I'm wearing a tin hat. And to give a bit more context, after interest rate cuts began in March 2020, real estate markets across the country went through a period of strong price surges where cheap debt for nearly 2 years led to record home sales and price gains in basically every corner of North America. But now that interest rates have been on the rise again, well, many markets are starting to give back some of those gains experienced over the past 2 years, if not a lot of them depending on the area, right? We're seeing hundreds of articles coming out like these ones highlighting the fact that the real estate market is cooling off dramatically, with expectations of it continuing to do so throughout the course of 2022 and 2023. In fact, even according to the Royal Bank of Canada specifically, the Canadian housing market could see a historic correction over the course of the coming months that they believe would bring down transactions by up to 42% from peak to trough, basically meaning from the top of the market to where it will stabilize. Do note that this is for transactions though, not the average value of properties, okay? RBC isn't saying that they expect home prices to drop by nearly 50%. That's just not gonna happen. And right off the bat though, as a real estate investor and homeowner myself, who's constantly speaking with my mortgage broker as well as my realtor literally almost on a daily basis, I can confidently say that we are absolutely in a market that is transitioning and not really sure of where it is heading, especially in certain pockets of the country. Right, if you've been to any property showings lately, you may have seen one or two other buyers, but it's certainly not the 15 other buyers that you've had to wrestle with overbidding and bidding wars experienced in 2021 and the first half of 2022. It should also be noted that we're absolutely seeing the largest declines in transaction volume and average sold prices in BC and in Ontario, mainly in the GTA and in Vancouver, where we saw the largest run-ups in value to begin with. In fact, looking at the data that was last updated in mid-August, we can clearly see that average national price points have been dropping in parallel to the total number of transactions, where Canada's average home price has now decreased on a monthly basis for the 5th consecutive month. And what's interesting is that while the actual number of transactions is trending towards the same values seen in January of 2022, so very low, well, the narrative here is entirely different, where the average sold price is following a completely different trend. In January, it was the lack of inventory in parallel to still low interest rates that were driving up price points. Fast forward to now in July-August period, inventory is still relatively low, but demand has also decreased significantly as a result of higher interest rates. In fact, I've made a couple of videos recently on the channel speaking about this very topic, comparing buyer purchasing power and the ability to maintain monthly mortgage payments in various different economic cycles, because people don't seem to fully understand the relationship between interest rates and price points. From a monthly mortgage payment standpoint, high prices but low interest rates typically balances out to a lower price point but a higher interest rate. Overall though, there's really no other way of putting it than that Canadian real estate prices are following, which is actually what many have been hoping for quite some time at this point, especially new home buyers and millennials. Now realistically, am I surprised that we're seeing property price points correcting after multiple double-digit annual growth rates? Not at all. In fact, I've spoken quite a bit on the channel about the unsustainable and speculative nature really of the Canadian real estate market over the past couple of years. And although every property owner has absolutely benefited from this appreciation over the past couple of years, of course, well, that's not how you make sustainable gains and long-term wealth in real estate to begin with. When it comes to strategic real estate investing, you create consistent returns with calculated cash flows and equity accumulation. Any type of appreciation is just a cherry on top. But hey, at the end of the day, you can't discount overall natural appreciation over several decades because, at least in Canada, it is by far the main way that the average person builds wealth over time. It's the exact reason why your grandparents built a house in the 50s for, say, 30 grand and just sold it for just shy of $1 million a year ago. So with that said, do I believe that we'll be seeing an actual price crash in the 30 to 40% range? No, I do not, simply due to Canada's lack of inventory, massive immigration levels, labor shortages, and high average homeowner equity to begin with. Even though there's without a doubt less demand right now due to higher interest rates, the Canadian housing demand is still very high relative to inventory available. So I think a lot of buyers are on the fence right now as to what to do moving forward, but everyone who is priced out of the market over the past year or two is still very eager to make a move. So I personally believe we'll be seeing price points stabilize sometime over the course of the next 12 months, at which point if interest rates do start declining with inflation levels under control, we'll see demand pick up once again. Ultimately, what kills people in a real estate bust is over leverage without the ability to cover those debt payments to begin with. Basically, buying too much home than you can afford with your personal income. So yes, the people who bought their primary residence at the peak of the market might feel squeezed over the course of the next couple of years with higher interest rates, especially when and if those individuals have their mortgage term up for renewal after a 3 or 5 year mortgage term and interest rates are still high. This is especially true if they chose a variable rate mortgage and bought the largest home possible for their debt to income ratio. But even still, banks have had tighter lending policies and guidelines to follow that were not in place previously, and the stress tests also take into account higher interest rates when qualifying someone for a mortgage loan to begin with. All in all, as I've said before, following 2 years of multiple double-digit annual growth, this current correction shouldn't be surprising. In fact, I'm welcoming of this current correction. If it means more first-time homebuyers are able to secure their first property or their first rental property, then that's fantastic. I am all for people building wealth through real estate as well as becoming property owners. In fact, that's the main reason why I make so much content about property ownership as well as real estate investing to begin with, in order to document my entire journey and share as much information as possible to facilitate your own journey and try to avoid as many of the mistakes that I've made. Alright, now considering that we are in the middle of seeing property prices declining, I cannot stress enough that now is the time to learn as much as you can about property ownership as well as real estate investing, and also save as much money as you can in order to make your next move when the time is right for you and you're able to acquire a first property instead of indefinitely sitting on the sidelines and never becoming a property owner. Because look, I'm an actual investor who happens to also make content in order to help motivate and guide anyone who's willing to watch. But by doing that, putting myself out there online, well, I get all types of spectrums of viewers, from people who are super happy that I make this content because they want to actually take action and apply it to their own investment portfolios, to also people who think that I'm literally Satan reincarnated because I'm a property investor. But you can't please everyone. But no matter where you stand in regards to this topic, there is no denying the fact that property ownership is the quintessential way to build wealth over time, and real estate markets go through cycles as we're experiencing right now. This was a perfect market cycle. A couple of years back, we were seeing the top of the market, and now a year later, we are seeing markets shifting as a result of different macroeconomic circumstances. But historically speaking, property price points tend to end up higher in the next market cycle, and in the Canadian market, we were definitely in need of a breather after such a large run-up, but there are just far too many factors leading to upwards demand long term and not enough supply. Where I'm going with this is that everyone has a different set of financial circumstances, but for the hundreds of people who have commented on my real estate videos over the past 2 years or so, saying that it has been completely out of hand in their market, that may very well be true, but I'm calling it right now. The next 24 months is going to be your window of opportunity to make a move before the next market cycle, where things are most likely, in my opinion, going to get even even more out of hand, at least in terms of higher price points. And finally, that's in regards to home ownership. When it comes to real estate investing, property price points decreasing should mean absolutely nothing in terms of quality real estate investing with long-term growth and value add opportunities. Real estate investing should never be based on speculation anyways. In fact, I only purchase property that I know will have proper cash flows after the stabilization period, and that I'll be able to create some nice equity based on things that I can actually control, not on market movements. But in a market transitionary period like we're experiencing right now, you need to be extremely certain of your after repair value if you're looking to renovate a property and increase its value, and or be extremely certain of exactly how much the property will cash flow in order to make a deal worthwhile. Otherwise, you're basically just shooting in the dark. So that's what I've got for you today. I really hope you enjoyed the video. If you want to learn more about property investing, make sure to check out the entire real estate investing and home ownership playlist that I have on my channel, going through absolutely everything you need to learn about proper real estate investing, all for free. And speaking of free, if you want to access the property analysis spreadsheet as well as the home affordability spreadsheet that I made, you can access both of those down below in the description. And if you have any more concrete questions that you want to ask me directly, you can also book a call with me, link down below in the description. So with that said, thanks a lot for watching, and make sure to comment down below, and I will see you in the next one.